Welcome to the Dental Business Guide podcast. From money to marketing to management, this podcast will help you run a better dental business.
This evening, my name's Arun, and is this working? No, it's not working. It's gone. Sorry. Where are my PowerPoint slides gone? Right. Is that it? Can you see that, Dan?
Yeah, see the start bit.
Okay, great. All right, got it. Okay. Technology, eh? So thank you very much, everyone. Welcome this evening to this webinar on managing interest rates and controlling inflation in your dental practice. Now, before I start, I have to say I have got a dog sitting on a window ledge next to me who might actually go off one because she's waiting for someone to turn up. And when she does, then it might get a little bit noisy. So I'm going to just warn you in advance if you hear some dog barking. But tonight, I'm going to be talking about, with Dan, some of the things we've seen in practice and things that people need to consider when what they're doing when they're running their businesses. So let's move on straight away and talk about the current environment and introduce about who I am firstly. So I'm Arun. I'm a chartered accountant and the owner and CEO of Samera Business Advisors. I also own some dental practices here in London and Surrey called the Neem Tree. I've been working with dentists for 20 years. I'm actually married to a dentist, Smita, hence how I got into the industry. I trained with PwC many moons ago, and I used to work in banking, and then I decided I really didn't like it and I want to work with dentists. And that's what I've really been doing for almost the last 20 years in all shapes and sizes, as accountants, as advisors, as tax advisors, as M&A advisors, as raising finance, a whole range of things. You name it, we pretty much do it if it's around the financing. But we'll talk about that a little bit more later. And then I'm joined by Dan. So Dan, do you want to welcome yourself and introduce yourself tonight?
Yeah, hi everyone, I'm Dan Fearon. So I worked for RBS for about 20 years. In the last 10 years, I was Senior Relationship Manager at RBS. So I dealt in healthcare department, so doctors, dentists, pharmacists, etc. I joined Samera as a finance broker about 4 years ago now.
Yeah. Right? Flown by, isn't it?
Obviously, it was a lovely fit. Yeah, it does, isn't it? But it was a lovely fit for me. Obviously, we specialise in the healthcare sector. So obviously the things that I learned at the bank were easily transferable to Samera.
Okay, thank you. So Dan helps with all the loans with his colleague Nigel, Simon and others in the team to help get loans, refinance loans, asset finance, new practices, you name it, he does it. So that's a little bit about ourselves. So let's crack on. So just going to touch on a few points that which have created this environment that we're in. And we're all probably aware of them already. But initially we had COVID. Then we've now got a war. Now we've got inflation rising. We've got interest rates, levels that we haven't seen in a long time. Energy price rises, volatile stock markets, tax rises likely to occur over the next few months, but they might even drop as well because of an elections looming next year, possible recession, you name it. There's a whole range of things going on. And so to navigate this kind of period in running a business is actually not that easy. Prior to COVID, things were pretty smooth. There was no war, there was no COVID, there was no interest rate rises. Everything was low, inflation was low, interest rates were low, and running a dental practice was relatively straightforward. Okay, there are complications, but now we all have to have a much more business and commercial head on ourselves to ride these kind of different issues that we're facing. So if we just look at inflation initially, okay, inflation over the last 12 months has been all over the place. It peaked in October last year around 11.1%, and back in August this year, 6.7%. So it's on its way down, but the target of 2%, we're still way off. And that's what the government's target is, to get back to 2%. If you look at it over a 5-year period, you can see post-COVID, even it got really low. And then now it's rocketed and now it's coming down. So over a 5-year period, you can see what's happened. It peaked at, as I said, in last year. It's on its way down. There's talk of it coming down further. I guess time will only tell. But with oil prices, as we see in the news just even today, oil prices rising to about $95 a barrel, I don't think inflation's going to be coming down that soon. Now, how does that impact interest rates? Well, what we've seen over the year is a steady rise in interest rates, virtually zero back in April 22, and now we're at 5.25%. I don't think anyone predicted this could happen back in April 2022, but it has happened, and this has had a massive impact on businesses, on borrowing, and it's likely to stay at 5.25 for a little while, and it may come down if they can control inflation, because that's really their only lever the government Bank of England's lever to actually control inflation is to use interest rates to manipulate the market. So we are where we are. There's not much we can do. But what does that actually mean in terms of well, actually, before I go on to that slide, in terms of what's happened in the kind of wider financial markets as well? Well, we saw a dip back in 2020 because of COVID, and the stock market's kind of rebounded again. So things are so unpredictable. No one knows which way is next. And that's the difficult thing in running a business. What we might say today, next week, it could all be very different again. So there's lots of moving parts, and the key thing is to immerse yourself and understand what's going on, and then make decisions based on the information that we have. We can't make decisions blindly. We try and make the decisions based on the information we have. Sometimes we might get it right, sometimes we won't. But what I thought I'd do though is highlight the impact here. Maybe Dan, do you want to run through this slide actually? I think this is probably...
Yeah, so what we did was sort of put together the sort of impact of the base rate change it's had on repayment. So what we did, we picked out two sort of size loans, one for 100,000, one for 1 million. And then we looked at sort of 2021, 2022 and 2023. And obviously you can see there, obviously in 2021, obviously with the base rate being at that nice figure of 0.1, obviously what impact that would have on the actual repayments. So you can see that steady rise from 2021 growing to 2022 and sort of adding quite a large cost onto the refinance, especially if you look at that £1 million mark. Obviously the annual repayments do jump up quite a bit. Obviously the one point to bear in mind on this slide really is obviously the bit that you can control in terms of the rate. Obviously the base rate, if you're on a base rate loan, is factored in obviously when they have their meeting monthly, that can go up and down. But the actual rate that the bank offer you, that's really the part that you can sort of have an impact on and sort of try and, not control, but try and get the best rate possible in the marketplace.
Yeah, absolutely. So you can see here, just on a £100,000 loan back in September 21, you'd be paying 695 quid a month. Now it's 970. Okay, that's a massive jump. Okay, it's almost 50%, isn't it? Really, almost 45-50% jump in payment. So a lot of money on a month by month basis. Therefore, you need to be generating that type of money or be doing something on your business to actually be able to afford to pay that increased cost. So that's kind of just painting the scene and kind of giving it an idea what's happened in terms of the impact of interest rate rises. So what do we then need to do in our business? I suppose that's the next question. How can we manage this within our business? So if I can move it on. So what we've done is just put some thoughts and ideas around cost savings in this kind of next bunch of slides. So let me just get this going. So, but before we do that, one of the things you want to consider, and especially if you're a practice owner, this is all very relevant to you. We want to increase the bottom line in running a business is you want to kind of maximize your profitability without compromising the care, without compromising the delivery of what you provide to patients. But we also have to look at some point you may want to exit and sell your business. So remember, for every £1 saved in your business, your practice value would go up by a multiple of that. And the typical multiple now may be anything between 4 and 6 times for a practice on average. Okay. So, and therefore, for every £1 you save in profit or EBITDA, your value of your business might go up by 4 or 5 times. So the key is to think, how can I save efficiently whilst increasing the value of my business or practice? So, excuse me. So if you look at this very simple example, this practice turns over £1 million, costs are 850, EBITDA is 150 grand. Okay. Let me just move this thing out of the way in this instance. But if you cut the cost by 10%, EBITDA rises by 235,000. That's an increase in profit of around 56%, a lot of money. But more importantly, is for when you're trying to exit, that's where it gets more important, more kind of important to consider. So if on the original profit, the valuation would be around 750, but when you exit, if you've increased the EBITDA, this goes up to about 1.1, 1.2 in this, just in this very simple example. Now, you might say, well, it's not really relevant to me, and you might be wondering the question, well, is the actual practice market, sales market still active at the moment? Well, for the right type of practice, it is. So if you're thinking about selling in the next year or 2 or 3 years, it's important to be optimizing the profitability of the practice. So it's performing at its best that it can. There's no doubt things have slowed down because of the rising interest rates. People are a little bit more nervous to borrow. Large corporates are slower in making deals, and they're slower in buying practices. But there's still an appetite, and I'm pretty confident the appetite will resume maybe in the next 12 months when interest rates do probably come down, when inflation's under control. But therefore, it's important to prepare your practice and get it in shape if you are going to get it, going to sell it in due course in the next 2 or 3 years. So what I've just put some here is just some average figures. These are very averages, and sometimes averages are kind of a bit meaningless, but you can see here, lab bills around 7%, materials about 7 to 8%, staff costs 17% of turnover, net profit is about 24%. Okay, these are very averages. I'm not going to go into too much detail because it's not relevant really, but I just wanted to highlight this slide. But what we want, the thought process is, where can you save money? Now, there are a bunch of areas that you could save money in. One is staff, potentially, associate costs, managing your overheads better, material costs better. All of these things can be looked at. Now, and we'll go through each area in a little bit more detail now. So, but before we do that, finance costs are probably one big area. And as we've seen, interest rates have risen, and the impact that has, as Dan highlighted, it moved from 0.1% to 5.25% is the base rate. So it's so important when you're looking at finance that you know what you're paying and what bank rate is being charged, whether you're buying a piece of equipment or whether you're buying a practice or whether you're buying a building. So it's so important to understand, whether it's with a bank or with a broker, to understand what is the amount and what rates you're paying, and over what term as well. So if you're looking to refinance loans and that you're not tied in, you can still get a good deal out there. And Dan's going to talk about that in a moment. And more importantly, though, we've seen, especially in these last couple of years, we've seen a lot of people take on short-term debt, things like credit card debt. And it's really, really important to get out of that and get rid of it as quickly as possible. You may be able to release equity in your practice or house at a much lower cost, which ultimately save you money. Because I think credit card interest rates are, 30%. Are they down? I can't remember now, but something's ridiculous, or maybe even more now. Okay. Yeah. So it's high. So you want to get that down and not have that short-term debt. So Dan, do you want to just talk about what people should be thinking about when it comes to financing?
Yeah, so if you have started to see with the change in base rate, what you may have done in the past is that you haven't reviewed your position in terms of your existing loans, because you was on the low rate, you was making the repayments, and you probably wasn't really thinking about that. Obviously now with the spike in interest base rate, what you're finding now is that people are starting to have a look at what their costs are, like you were saying, Aaron, about looking at their overall costs. And now they're looking at what can they do to reduce their finance costs. And one of the ways to do that is obviously looking at refinancing your existing debt. The loan that you have at the moment, may be on a higher rate than what you could achieve in the market. On a refinance at the moment, you're probably looking at, you could get a rate of possibly 2.5, maybe even a bit lower with the right bank. So there are banks out there still lending to the healthcare market and could be lower than what you're paying at the moment. And obviously, if you can term the loan out for a little bit longer, that will also have an impact on your monthly repayments, which will certainly help in terms of cash flow as well for the business.
Yeah, definitely.
Yeah, and the thing to bear in mind about your existing loans, obviously, you need to have a look at the terms. It could be you're on a loan that has an early repayment penalty. on it. So that may not be, as good to look at and try and refinance, because if you have to pay a fee to exit that loan, then, it may not be in a good position. But what you'll need to do is have a look at all your information, look at your term, look at your monthly repayments, decide what you want to get out of it. What are you looking to do? Are you looking to reduce your monthly costs for the business? And so terming the loan that, you may have 5 years remaining, turning that over to 10 to 15 years would have a big impact on your monthly repayments and make everything a little bit more affordable. But you have to also weigh into the saving that you're going to have in terms of the rate with what the other costs could be in terms of refinancing. Because once you move your rate to a new lender, or your loan to a new lender, you're going to have evaluation, you're going to have some solicitors' costs, the bank's going to charge you an arrangement fee, which can be added to the loan. So you have to weigh up everything to make sure that you're making the right decision. And one thing you could possibly do, if you don't want to go through the hassle of refinancing, is maybe speak to your existing lender and look at two options. One, see if you can negotiate a better rate with them on your existing terms, which they're not always happy to do. Or you could look at a fixed rate option where with a fixed rate, you can sort of tie your loan in for a period of time so you've got a regular amount being paid and it won't fluctuate with any base rate changes.
Okay. And on the negotiating with the existing bank, what do you suggest people come to you because you can negotiate the best terms on this, because you get across the market view, can't you?
Yeah, come to us. We're happy to do that. Sometimes banks are more willing to be more assisting when they know that it's a possibility that loan may be going somewhere else. So by all means, we're happy to have those discussions.
Sure. Okay. All right. Great. And what do they need, Dan?
Yeah. So obviously you've had a look at all your paperwork and decided, refinance is for me. So what sort of paperwork would you need to put together, really? So what they would just need to understand is the length of the loan, what that loan was for originally, the purpose. It may not be a big issue in terms of that, but they'll just need to know. They'll need to see the income and expenditure of yourself personally. They'll need to see the accounts for the business, because obviously they still need to prove the profitability of the business to service the new debt. So although you're still paying that loan, it sounds silly, but the new bank will still want to know that everything can be covered. They'll need to see some tax returns. So they'll need to know if you're covering all your tax, bank statements, again, making sure that all your items personally and business items are being covered without any issues, and a CV. And so once you've got all that information together, lenders will be happy to have a look at that facility.
Brilliant. So they can do it themselves, but what's the advantage of using people like yourself, Dan?
This is the thing, So the thing is, yes, you can do it yourself, right? But the problem you're going to have is a number of things, really. One is, do you have the time to do it? Do you have the time to speak to the bank and go through all this information? The other point is that if you speak to one bank, that bank are only going to give you their rate. They're not going to go, by the way, you can go and speak to the bank down the road. They've actually got really good rates. Why don't you speak to them? So what we do as a broker, so we take a lot of the hassle away. So all that information that I've said that the bank will need, we will gather that for you. So we'd ask for that, we'd get all that information. We'd structure the deal in a format that the banks understand and like. Like I said earlier, so I used to work for a bank, so I understand exactly what information the bank needs to see to be able to take something to their credit team. We will come back with you. So instead of saying ABC Bank will do that, we will send this bank, this bank, this bank, this bank will give you. So you will have a range of offers from us at Samera, so that you can make an informed decision on things like term, things like the rate, what security items they need. Because all banks have little quirks, it's not everything is exactly the same. They may offer you a good rate, but there may be a repayment penalty in there that you don't like. So we will give you all those options so that you can say, okay, based on this information, that's the bank for me, and then you'll choose which one you want to go ahead with. Then from that point is we won't just get the finance brief from you and then sort of walk off. What we're doing after that is we are continue speaking to the banks and pushing the deal forward. We are speaking to the valuers and making sure they move forward. We're talking to the solicitors as well. So, we're still involved in that transaction. And again, sort of giving you that time back so we can you can focus on the dentistry and we'll focus on the finance.
Yeah. And I think just we've been brokering now for a number of years with yourself, Nigel, and others. We're very well immersed in the healthcare market, and we know all the banks, all the lenders. Yeah, we know the right people to talk to, but also we also know the quirks of the banks and which bank will be more lenient on something and which bank will be more strict on something, and where we can push it to get you the best deal. And I think that's kind of a really important point here to highlight as well. So moving on, so then there's other things to think about. So that was all about the finance costs. How can you save money on finance? But there's a whole range of other things you need to think about in your business. You've got a whole load of costs in your business. Now, one of the areas is business rates. Sadly, all businesses have to pay this. I know NHS practices get some form of reimbursement, but private practices don't. So it's always important to check that you're paying the right business rates. Now, there was a revaluation that was delayed to 2023, so you need to make sure your business rates have been revalued and you're paying the current rateable value. And they're hence paying lower rates. I've seen some clients who haven't done this yet or haven't been notified by the valuation office. Chase the valuation office, make sure you're paying the right rates. That's the bottom line message I'm just trying to get across here. Because business rates can be a hefty amount that you pay each month. So make sure you've got that correct, and paying it the right amount for you. Now, staffing. Now, having been married to a dentist, who runs clinics, I know how stressful it is to hire people at the moment. There's a shortage of resource. Some staff are requiring more money, even though they might not deserve it. There's a whole range of things. So it's really important to think, okay, have I got the right team? Have I got made sure all the roles are filled? Do I have incentives in place to kind of incentivize the team if they're doing well to do better and to reward them? Because it's inevitable that in a rising inflation market, salaries will rise, and the demands of team members will rise. But more importantly, if you've got a really good person, you don't want to lose them. You really don't want to lose them, because that'll be a big cost to you, because you've got to retrain people. You've got to go back to the drawing board, and you might not even find someone who's equally as good as them, or even not as good as them at all. So you want to keep the right people and pay them the right amount of money, but ideally, at the same time, manage that fixed cost in a way that you incentivize them. The business does better, you pay them more ultimately. In terms of recruitment fees, if you have to pay recruiters, obviously negotiate these. And if you can, just not hire temporary staff, locum staff, because they're always more expensive than having a permanent employee. That's an important thing as well. So I know it's easier said than done, having been on heard all the stuff from my wife and the problems that she has in running her clinic, sometimes hiring staff, but that's part and parcel of running a business. Associate pay, again, another area. Again, this is a sensitive area, because I know some dentists, associate dentists want the higher 50%, but that goes back to your fees, and I'll talk about fee structure in a minute, but what you charge to patients. But quite often or not, if you're paying 40% of 1,000 or 50% of 750, which would the associate want? They want the one that ultimately gives them more money. So you need to manage expectations, and in a rising cost environment, you need to make sure the associates understand why you're changing percentages or why you're considering changing percentages. And the best way to do that is having conversations with them, or put some type of sliding scale in place. I know in our clinics, we have sliding scales between 40 and 50%, depending on what they bring in, with the lab fees split. That kind of mitigates some downside. And again, if you aren't doing that, think about it. If you need help, give me a shout. Digitizing your practice is another area to save money. Things like impression material you can save on. If you're using an intraoral scanner, the efficiency can be much faster and better with information going to labs. And ultimately, if you create your own lab in your own business, again, that could save you money. In our own clinics, we have our own lab. That ultimately saves us money, not having to send it to third parties. We've invested in equipment, no doubt about it, but that means over the long term, we're saving money, and we've got a much more efficient way of providing care to our patients. And again, you can negotiate and shop around on equipment. And again, you don't need to buy the equipment with cash. You can buy it with cash, but if you want to finance it, again, through asset finance, Dan is your man.
And just on that,
sure.
On the asset finance stuff, obviously, if you're looking at your working capital, if you're buying that equipment with cash, obviously you're tying up a lot of money within the equipment that you're looking to purchase. So, like I say, asset finance is a good way to do it, where you can term it over 5 to 7 years, and again, it just frees up a bit more money within the practice. Correct.
Again, stock ordering, and again, it's about knowing what to order, how much you need to order, basically having a system in place so you can compare prices, and again, utilizing online ordering. Again, that can usually save you money. And I'll be talking about a little bit this later with the buying group that we have in place. Going paperless, all our clinics now have multiple screens on desks. We try and save on paper and printing. All invoice information is scanned to the accountants. Again, not having to send anything. We try and keep everything as PDFs. But the bottom line, saves money, saves printing. These little things all add up. Okay, printer cartridges, you know how expensive they are. They are very expensive. Again, train the team. Get them to think about, how can I save money? And going paperless is one of those important things as well. Utility bills, again, simple things, little signs on the walls: turn the lights off at the end of the day, turn the heating off, turn the aircon off. Energy costs, we all know, have risen. And again, through our buying group, you can save money by reviewing your contract. And you don't have to do it through our buying group, far from it. But if you haven't, talked to your supplier, see what you can save, what you can do. Can you get a better deal or not? Again, another area is to make sure you're minimizing chair downtime. So make sure you're servicing your equipment regularly, so they don't break down. A lost day for a dentist is an expensive day. So ensure you have a service contract. So every 6 months, 12 months, whatever is needed, your autoclaves, your chairs, everything that you need to use on a regular basis is serviced regularly. Make sure that's happening. And then that leads us to the buying group. So the buying group is something we set up a number of years ago, and it's got many members now of dental practices. And the bottom line is that we've negotiated better terms, like for materials, for certain equipment, for certain services to the members already. And if you look there's a QR code on your screen. What I'd suggest, if you haven't already, take a photo of that QR code, and that will take you to that web page you see there, which is the Samera Alliance, and that's the name of the buying group. And what you can do is you can have a look at it, and it is absolutely free to join. We do have a higher tier, but some people join that if they want to use more of the services. But the vast majority of clients join the free service, and once you're on it free, you will start saving money. We can pretty much guarantee that with the materials, because we've negotiated good terms with suppliers. And you can compare that. And the way to do that is to send your material invoices to Dan, and he can compare it with what we can get for you. And 99% of people join it once they realize that they can save money. So if you haven't already, take a scan or take a photo of that QR code and make sure you've got it in place for you. Dan, do you want to add a bit more on that?
Yeah, well, you sort of took my thunder.
Sorry about that. Well, you can say it again.
That's a pretty standard for you, really. Like Aaron was saying, really, by joining the buying group, it's 100% free. The good thing is, on the free service, you can save money on your consumables sort of straight away. It's very simple to do. Say you join the group, all we do is just set you an account up with our product owner, and basically, once you place that order, that discount that happens automatically, so you don't have to do anything else. By ordering through their account, the discounts are done. The good thing with the product partner we've got on there is they've got many years experience in terms of dental. They can, if you choose to, they can do a next day delivery, so if you need things quickly, and also as well, they've got their own branded goods as well. So I say there's no sort of catch. I know it sounds a bit funny when people say it's free, but is that you join the service, you can start benefits from the consumable savings, and so say if you either use the QR code or if you want to reach out to me directly, I can get that sorted out for you.
Great. other things that we can take covers down. You can't see them at the bottom, but can you see those?
Yeah, so on the other bits, so there is, like Aaron said, there's a 2-tier service. So on the consumables, that's completely free. If you wanted to have a look at some other items, and there is a charge for that, it's £60 a month, but on that they can look at sort of equipment. So if you're looking to do equipment in the practice, you'll get a discount with that. CQC compliance, we've got companies who can give you a discount via that. One of the other ones as well, the utilities, that's quite an important one, like Aaron mentioned. That's a big cost for dental practices because you use a lot of electric and power. So what they can do, they can sort of look at your contract you've got at the moment and negotiate new contracts with the companies. The good thing is obviously they've got, like with the buying power, these companies have got obviously like the power to try and negotiate. So they instead of just dealing with one person, the company's dealing with, they're a bigger company, so they can negotiate better rates. So again, if you wanted to find out a little bit more about the buying group, more than happy to have a sort of call and just go through all the details.
Sure. So that's kind of the cost side, but the other side to look at things is raising fees. And you might be wondering, well, I can't raise my fees because people won't come and buy my services, or they'll go to the practice down the road. But we've got to look at things, and I understand that will the demand be inelastic, i.e., will the demand for your services continue even if the prices rise a little? So we use always something called the 80-20 rule. 80% of your income comes from 20% of your services. So I would firstly say look at changing the prices of these these services, those ones that create 80% of your revenue, that small 20%. And you could question, will the demand be impacted? Maybe, okay. But look at services that are unlikely to be impacted by demand and always review your prices as costs are rising. So I'd really strongly suggest you do that. Now, a way of doing this is we do this for clients, and we've just done one for another one just literally this week. Is if you're using, this is kind of based on software of excellence, and you could have a look at it yourself. It gets a bit complicated, but you could look at running your invoice treatment report from your system, say for the last 12 months, and then look at the average price of each service you've done. So, for example, if you've done, say, 3,000 small x-rays and charging £12 each, and if you raise the price by £2 to 14, to the top line, that will just add, assuming you don't lose any of those x-rays going forward next year, you're adding £6,000 to the top line. So now you need to do this for each and every service that you're offering. Now, some services you might not be doing huge volumes about. You might be doing just a handful, like implants or Invisalign. Doesn't matter, but sometimes you've got to look at the things that you're doing a lot of volume of. So fillings or crowns maybe. And doing this can have a massive impact on your revenue and ultimately your profits. And again, this is another QR code. We're going to get a few QR codes this evening. You can scan that one and that will take you to a page on our website where we talk about this in a little bit more detail. And if you need any help, we can help you and prepare and work out your optimum pricing for your practice. And the way to do your optimum pricing is to figure out what are my overheads, understand what kind of costs I've got in place fully, the variable and fixed, then work out what kind of margin you want to make on each of these services, and then work out, okay, what is the price I should be charging for these services? And then look at that. How does that compare to what you're charging now? And also, how does that compare with competitors? And how does that compare with what you want to charge for your prices? So it is a bit of a long drawn out way of doing it, but you'll then have an optimum price list to charge people based on knowing that you're covering your overheads, making a margin, and ultimately, kind of getting the maximum profitability out of your business. So that's kind of the cost side and the pricing side. But then as an accountant, I have to also kind of dwell on accounting aspects as well, because it's so important to get, if you're going to really be serious about managing your costs, managing your pricing, managing your revenue, managing inflation, you need to be slick on your accounting. So good old Albert Einstein always said this: the hardest thing in the world is to understand is income tax. So I'm just going to quickly talk about the tax side of things, just so you have a fuller picture. I'm still seeing, and we've been doing this 20 years, we still see dentists as an easy target for HMRC. They're high earners. Some have done some interesting tax planning in the past. They're not the most always organised because they're very busy, typically. and they're usually an easy target for HMRC to target. So it's important, firstly, to get your paperwork in order and to have your admin organised. Just recently, what we've seen, or not recently, but over the last few years, we've seen the tax thresholds, income tax rates not growing, but also the tax thresholds have frozen as well. This means it's okay if inflation's low, but if inflation's rising, as we know, it's at 6.7, it was up at 11%. Inflation will erode the thresholds very quickly. The government is relying on inflation ultimately to push people into higher tax brackets. As your salary rises up, the tax you pay, the bands aren't moving. You're paying more tax. So that's the sneaky thing that the government has done and are doing currently. So every time you're getting a pay rise, you might be thinking, great, but a larger chunk of your tax, of your income, is going in tax. The other thing to think about, if you haven't already, is to look at, should it be a company or a sole trader? There have been changes in the company tax structures over the last year, with tax rates now up to 25% for limited companies. Well, I won't go into the detail, but it's important to assess, is a sole trader right for you? Is a partnership right for you? Is a limited company right for you? And if you need help, there's no QR code here, but if you need help, you can get in touch with me. One of my team can certainly provide advice on this. And if you do have a company, it does give you a lot more flexibility. You can take money out of the business in a number of ways. You can take a salary, you can take dividends, you can pay loan interest if you've lent money to the business, rental income if it's in the premises that you own, pension contributions, tax-free benefits in kind, there's bonuses, there's a whole range of ways, okay? So that's why I'm always a big fan. If it's been planned right and thought out properly, a company is an optimum way to structure a practice ownership. We've kind of talked on that. I won't go into too much detail. And one of the other things to think about is also in terms of costs and for your longer term is to think about your contributions to your pension fund. Pension contributions can be deducted as a business expense, and you then get corporation tax relief on your pension contributions. And again, it's better than paying a salary to yourself, as you're not paying any national insurance. But what has to happen is that the employer, the company, has to make the contribution directly from the company to the pension. And remember, once you've put the money into a pension, you can't take it out until you retire. But it's a very tax efficient way. So if you put in £50,000 into a pension in the year, that £50,000 will get tax relief on the corporation tax. So 25%. And therefore your tax liability for corporation tax will drop, which is great. Okay. So little things like that. You can do salary sacrifice, schemes, where it's an arrangement which as an employer, you make available to employees. Again, it's a more efficient way to make pension contributions. You agree to reduce the salary, and then the difference is paid into the company pension. And since the salary is lower, the national insurance paid by the employee and the employer is lower. So these are things that can be done, and it's all about being kind of smart and savvy in how to set these up, which we can do. Other tax tips and ideas, as we talked about pensions, you can now give up to £60,000 a year. With no lifetime allowance, which is changing from April 2024. There's ISAs. Again, use your allowance if you can. 20k for yourself, 9k if you've got kids. You can carry forward losses from prior years, invest in EIS schemes, use your CGT allowance. That's dropped sadly from about 12,000 to 6,000, but if you can use it, great. Charitable donations, low emission cars. There are ways of doing things, but you got to be on it, and you got to be organized, and you got to be aware of it, and you got to speak to people like myself to assist you to do this if you're not doing it already. We can help in all of these: income tax, corporation tax, capital gains tax, inheritance tax, which is being mooted is going to change. Let's see if Mr. Sunak will change that. Not sure if it's the right thing to do, but anyway, that's what they do when it comes to elections. So that's the tax side, but then moving on, and I'm going to move on relatively swiftly because I know time is tight and you don't want to hear my voice all evening, it's about getting your accounting, your finances in order. And as I said earlier, some dentists are better doing this than others. And the government are seeking to get more tax back from people. And they're kind of trying to find cash and penalise people as much as possible. They are trying to hire new people. Difficult. They're finding it difficult. I know that because that's how they've closed down various HMRC helplines. But it's so important to claim what you can claim, whether you're a sole trader or a company, which will ultimately reduce your profits and ultimately reduce your tax. Dan, actually, on that note, just to highlight, we do get every year quite a few clients who haven't got the funds for their tax. What do we do in that instance?
Yeah, so if you haven't got the funds to pay your tax bill, then we can arrange finance to sort that out for you. They'll normally do it over like a 12-month period to repay the tax, but yeah, there's many lenders out there who will be happy to look at that. Yeah. So if you are having a bit of trouble then sort of raising the funds for your tax, give us a shout.
Brilliant. Okay. And you can check out that link on our page, Accounts for Dentists. There's a whole load of stuff on there. In addition, you want to go digital if you haven't already. If you're running a practice, you want to use software, like HubDoc, which is an OCR-based system where you can scan it scans the invoice and the invoice information is extracted. And that information then goes into something like Xero or QuickBooks, where you can do the bookkeeping can be done and bank reconciliations. And more importantly, it's up to date. The information's up to date. And with that up to date information, you can make better decisions. You can look at your costs that you might be spending on materials or utilities or staff or whatever it may be and think, you know what, I need to trim back here. And that's the whole point. If you've got up to date information, the numbers tell you the story, and then you can ultimately make better decisions from your business. One of the things,
and some lenders are starting to ask for management information as part. So if you are selling your practice, then some lenders may want that. So if you can get up to date information at the click of a button, that will help you in terms of the process of selling.
Yeah, no, exactly. And now one of the things, if you look on our website, and again, this is another QR code you'll see there. And this is I definitely, if you're in the market to thinking about accountancy services, whether you're a startup, whether you've got a single practice or whether you've got a group of practices, I would urge you to go to this page. Okay. If there's one page to visit tonight, is this page. There's a whole load of information on how your accounting should be done. We provide a solution for the very basic startup. To something more sophisticated. It might be an ongoing existing practice to people who might have 10, 15, 20, maybe more practices. We can provide a consolidated system as well, consolidated reporting for that as well, and provide associate pay calculations, payroll, you name it, we do it. And we've been doing this for a number of years and we've refined it so well. We know what needs to be done. We know how to set it up right. So for practices and how it can integrate into your workflow within a practice. So I'd urge you to look at this and get in touch, if you need some help.
And just also, if you are thinking of starting up, obviously, and you do need some finance for a startup, we're funding a number of startup practices, which sort of helps blow our own trumpet, we're very good at in terms of putting everything in place and obviously presenting it to the banks in the right way. So yeah, if you are thinking of starting up, then give us a shout on that.
Yeah, no, definitely. I think what we're seeing over the last year, or actually not even the last year, since COVID, to be honest with you, the startup market has just gone berserk, isn't it, Dan? Don't you think? Literally, we get an inquiry virtually.
So many inquiries. In the last week or so, basically inquiries from startups.
Yeah.
It's a great way of opening the practice. Obviously, you can choose your location. I think with COVID, that work-life balance sort of has come into it as well. So you can pick it where you want to be at a certain distance your home, and obviously you can set it up for a reasonable price.
Yeah, absolutely. So we've seen, and we've got in-house a load of experience from the financing side to the advice that myself and Smeeta can provide on our boot camps to IT support, you name it, and set up equipment to all the companies that we know and we respect and work with to help people set up their clinics. So we've got enough experience there. So in conclusion, on that side of things, it's so important to have strong records. Make sure your accounts are done on a month-to-month basis. You can then review the figures and then ultimately see the performance of your practice and make better decisions. That's what we want to do. You want to make better decisions from the information that's there. If there's no information, you have no idea and no one can guide you. But if you have the information, you have the data, someone can guide you, or you can look at the information and interpret it and make better decisions. So to wrap up, I'm not sure if people are aware of this, but we deal with literally hundreds of dentists' accounts and tax returns across the UK. So if you're in the market for a new advisor or an accountant, as I said, we're hundreds. Actually, we're nearly almost near 1,000 now, dentists that we deal with. As I alluded to earlier, we have the buying group, which is increasingly popular. Dan was talking about Dan kind of manages that. We've got the finance side, you need to raise finance. And as I mentioned, as accountants, we can help you with accountancy services. These are our contact details. You can email me, or you can email Dan, or give him a call. All the details are on our website, samera.co.uk. And one more QR code tonight. Lastly, it has to be there. If you want to book a call with us, all you need to do is scan that, book a call on our calendars, and we'll get slotted in the diary. Totally complimentary, with myself or Dan, or others members in the team like Gugam, one of the other accountants, or Nigel, or whoever you want to talk to, Natasha. So we've got easy access to us. One thing to also highlight, I will be putting out there, we'll be doing some on the road show meetings across the country, so across London, Birmingham, up in Leeds as well. So if you look out for those emails that are coming out, and so if you haven't joined our email list, I'll be putting out information of how to come and kind of arrange a meeting with me in person, again at no cost. And if you need any help, I'll be delighted to help. And lastly,
and I suppose just quickly, Aaron, just on the meetings, we have evening meetings as well. So we understand dentists are busy during the day, so you can book a free meeting. I think like 7 o'clock or something like that. So if it's easy for you to chat to us in the evening, then you can book that call on there.
Absolutely. Yeah, evening calls for me, Dan, Guggan, Nigel, whoever you need to. We're available to support us, okay? And then lastly, I've just put this here. Don't put your head in the sand. If things are difficult, if you're finding costs are too high, or something's not right, or you're worried about your business, get in touch. We can help you. We have enough grey hair, enough experience in our team. And we even have a dentist on our team, my wife Smita, who does often get involved in talking to other dentists to support them and to help them, coach them through any problems that they have as well. So on that note, I think we're done for tonight. Anything else to add from your side, Dan?
No, do we want to mention the networking group that we set up?
Oh, yeah, that's actually a very good point. I completely forgot about that. So do you want to share that?
Yeah, so
I'm sorry, before I interrupt, we forgot to put a QR code on that one, so...
Yeah. So last month we hosted our first sort of healthcare networking event in London for, I think we had sort of 30, 40 people there in the week. So we're hosting another one on the 11th of January. And again, it'll be in London. But yeah, if you can, obviously we can send some details out. But it's a really good way to sort of network with other dentists in an informal way. We've got some product partners there. We've had some equipment companies there. We've had some solicitors. You've got the team, so obviously accountants, finance guys, IT guys. So it's really useful. I say you get to meet other dentists and share knowledge, because we had a few people there who had recently sort of started the startup process, and we had some other people there who had sort of worked 12 months down the line. So they were sharing knowledge and sort of sharing sort of experiences. So I think it was really useful, and I say it's quite informal. Everyone sort of, has a good time. You can have a drink at the same time if you're choosing something to eat. But yeah, that's worth mentioning. So we can send some details out to that. Yeah, absolutely. That's on the 11th of January. So if you have registered with the BDA and you're happy to share your details with us, we'll share details. And that's the 11th of January at a restaurant in Covent Garden in London. And we've got good traction here. I think we'll be doing other events like this throughout 2024. And as I mentioned earlier, I'll be on the road quite a lot, I think in late 2023, 2024, across the country. So if people want to meet up with me, you'll be able to book one-on-one meetings with me on Calendly, to do that. Okay. I think we're kind of wrapping up there. I just want to check. Rebecca, are you there?
I am there.
Oh, perfect.
That's great. You guys do love the QR code, like more than we do.
Yeah.
We quite like to use it.
No.
And a dinosaur and a QR code.
Yeah,
well,
yeah.
so,
I saw that. I really like that. Maybe you can get some teeth in there.
Yeah.
That was brilliant. And we have had some questions. I mean, it's a difficult time, isn't it, for everybody, I think. So I think it's great that it's a timely sort of webinar to be hosting. And I've got the questions in the order roughly the presentation went. Someone, I think it might be a crystal ball question, do you have any idea where we might be interest rate wise in sort of 12 months time, 12 months, 24 months? I guess everybody wishes.
Dan, go on. You use your crystal ball.
It's a difficult one, because what you're seeing in terms of 5-year rates, bank rates are actually dropping in terms of 5-year rates. So that tells me that banks think rates are going to start going down at some point, because they don't never seem to leave themselves out of pocket, to be honest. But what you will find is, because I think on the last vote it was very tight. I think it was 5-4 to hold rates. So what that tells me is that some people are still possibly thinking that rates should go up. So what you may have is a slight increase in the near future, and then as inflation starts to drop, then the rates start going down. But I think, again, this is my opinion, is I think we may have to start getting used to slightly higher base rates. I think we've been used to that low interest rate, base rate, for so long. But historically, base rate was probably about 4 to 5%, sort of, over many years. So it's just that we've been used to, the very low rates, and I think we may have to start getting used to 4 being the normal again. But I think going forward, I think it will start dropping. So towards the end of next or middle of next year, then it may start dropping down again. But I don't think it's going to drop as quickly as it's gone up, unfortunately.
Okay.
You guys had a slide where you were talking about the £100,000 and the £1 million and the bank rate being 3%. Someone has just asked, what can you do when you're talking to the bank to try and get that 3% down a little bit? Is it a conversation you can have with them, or is it just that's their rate?
Yeah, so we can speak to the client and obviously try and negotiate on their behalf. That's fine. What you'll find, the rates are probably, 2.5 roughly for the right lender at this moment in time. But chat to the bank. If they want to try and talk to them directly, you can always sort of, sound maybe looking to go elsewhere. They should looking to retain loans for the bank, and they may be able to do something. And it could be obviously the situation's changed as well when they initially took out the loan, because in the past, some banks were doing these EFG loans, like the sort of secured or guarantee loans, and they were on quite high rates. Now you may be in a position that the practice is established, you're in a strong position, and they may look at you as a slightly different client, and you may be able to reduce the rates directly. But if they can't, then we're more than happy to go out to the market, see what we can do for you.
Yeah, and I think it's important to look across the market, because you can see what people are offering and then make a judgment call. And it might be that once you've got the comparisons, then we can go back to your existing bank and say, well, we can get it for 2.5, and we'll argue the case, and then they'll say, you know what, all right, then we'll do it.
Okay, and would you recommend increasing the term of a loan so that in the short term, I guess, gets your monthly payments down? Is that advisable? Somebody's asked.
Yeah. I suppose you've got to look at your situation, really. If you're comfortable with having that loan for a long period of time, obviously you'll pay more interest on that loan. If it reduces your monthly repayments, then obviously that could be the right proposition for you at that moment in time, really. So it's based on each individual circumstances, really. So as I say, if it makes sense to, if you've got a loan that's coming to an end, or maybe 5 years, and it's a lot cheaper doing it over 15 years, and that makes everything comfortable, then it's worth looking at.
And someone's asked, what kind of interest rates are banks offering at the moment if you're restructuring an existing loan?
Yeah, I'd say they can look at rates, around 2.5%, 3%. It depends on the lender, so that's why we go out to a number of lenders. They all come out with slightly different rates. Some will be down that 2.5 mark, and some might be 4. But we can look at each individual case and try and push it. Obviously, and then if you wanted to get a really cheap rate, if you threw in some security, they can look at that as well. So it's looking at each case as a kind.
And I think they'll also look at the quality of the business as well. Is the business performing well? Yes, that type of thing. That will have
it's got to be affordable.
Yeah.
So attacking that as a given, really.
Yeah.
Okay. You were talking on one of your slides about raising fees as sort of, you've got all because I know you talked about some of the cost savings that you can do, the small things like the printing, the lights, the heat, that kind of thing. You can do those small things from tomorrow. That's kind of a take home from this evening. But someone's just asked, in terms of fee rising, would you recommend, do they do like a blanket, all fees have gone up 5%, or do they pick and choose a couple and sort of introduce it slowly?
The way I would do it is, as I said, I mentioned, like, you look at the 80% of your income comes from 20% of your services. So there'll be a pool of services that you provide, and that makes up the bulk of your money. And I'd look at those items first, okay, and see what can I change. And you don't really want to just say, "I'll put 5% up." That's just kind of sticking a finger in the air. You really want to go down into the detail and understand, okay, if I put this up, how would that impact demand, and what would ultimately be the profit on that service that I'm doing? So that goes back to working out what are my overheads, and then working out what are my costs and what profit margin do I want to have on top of my overheads, which hence mean what fee I charge. And I know it sounds like a very convoluted accounting way of talking about things, but that would be the right way of doing it. Don't just say I'll put 5%, because 5% might not actually do much to your business. Okay. But certain services that you have, you might want to put them up by 30%, and that might have a massive impact on your business. And the other services you might just put up by 2%. Okay. So it's looking at the granular detail is actually really important to then determine which one's going to make you the big money. And is there, if you put something up by 30%, would your demand drop? It may not drop at all. Okay. It might still be there, and you can keep going at that rate. So it's really important to look at the detail.
Someone did ask, actually, talking about, they have a non-dental specific accountant. Are they missing, because obviously you guys are dental specific, are they missing something by just having a normal accountant?
I would 100% say that, because I would say that, I'm going to say that, but I would say all we do is dentistry, and with a few kind of doctors and pharmacies thrown in, all we do is healthcare. We know the software, we know the problems that our clients face week by week, month by month. We know the softwares, we know the best suppliers for certain equipment or consumables, these things. So that comes from being in the industry for so many years and knowing it. So yeah, I'd encourage them to give me a shout, and we'd have a chat and see if we can help.
Because Aaron, we even mentioned that, like, when we're doing the funding, if they've got a solicitor, we always try and get them to go to a specialist dental solicitor as well, because they understand the market. Like, dental's got so many sort of like quirks to it. If they're not understanding what they're doing, it can put you at a disadvantage.
Correct.
Someone has quite a specific question. Is dental student UK tuition tax deductible, as their son is currently studying his BDS?
Dental student, no, it wouldn't be. Well, what?
If their child their son must be at university studying to be a dentist. If they're paying his tuition fees, is that tax deductible?
No, that wouldn't be. From what I can understand, no.
Okay. That's great. Yeah, that was the last question.
Okay.
Which is, I think, perfectly fine. It's 8:30. So before I wrap up, a couple of quick housekeeping bits from me. Remember, once I shut the webinar down, the CPD survey will launch. So if you can complete that for me, then we can get your CPD validated, and we will send it out to your usual BDA email address within the next couple of weeks. And yeah, just a massive thank you to Arun and Dan. There was loads of information in there, lots of QR codes. I'm sure everyone's pretty busy scanning away. Dan and Arun left their contact details, but if anyone has got any more questions for them, please just email through to me or email through to events, and we can pass all that on for you.
If I could interrupt, those QR codes have worked. We've had quite a few people join the buying group as I've checked on the email come through. So the QR codes seem to work. So I'll be using them again in the future. So
it's so easy. Your iPhone scans it.
Yeah. So if you haven't done it yet, make sure you. That's right. Absolutely. Well, thank you so much, Rebecca, for having us. Okay, great to do it again. And Dan, thanks for your help again. And we look forward to the next one. Okay.
Yeah, brilliant. Thank you guys, and everyone have a good day.
Cheers. Bye.
Take care.
Bye.
Thanks for listening in to the Dental Business Guide podcast. We welcome your feedback, and if you're enjoying it, please let your friends know too. Until the next time on the Dental Business Guide podcast.